We are back. We are discussing the Leading Economic Indicators report that was published on the 2nd of October by the National Bureau of Statistics. This report covers the leading economic indicators reported as at the end of August. We are using this as a proxy of trying to understand what is happening in Kenya. We have and continue to await the GDP numbers that were due on 30th of September. We will keep you updated once these are published. To help us unpack this conversation, we are joined in studio by Mr. George Munga. George is the managing partner of AMG Kenya. Welcome back to the show.
Thank you, Mile.
In the first segment of this conversation, you give us a very good overview of some of the key macro indicators. We talked about interest rates, we've talked about currency, we've talked about CPI, we've also talked about inflation, and briefly touched on GDP and what the possible outlook could be. And I also like that you spoke to us from your experience, because you engage with SMEs, so you sort of have a feeling of what is happening on the ground. I want us now to switch gears and look at the sectors. The same report looked at the energy sector, the ICT sector, the manufacturing sector, as well as the agricultural sector. Maybe you can walk us through your thoughts, what you've read, what you have seen in the market, and what are your initial thoughts on this? We can start off with the ICT sector.
I think I would want to start off with the ICT. I want to start with agriculture.
ICT, okay.
Agriculture.
Okay, agriculture is fine. Agriculture is the largest.
That's the focus for any economist in Kenya. If you look at agriculture sector, I think this has been very challenging for the agricultural sector. One, you remember we had the locust epidemic there at the beginning of the year. Then we had flooding between March and April, and then now the pandemic that we have. So it's not been very rosy for that sector. And if it is not for the resilience of the Kenyan economy, then we are looking at a very gloomy picture for that sector. But that notwithstanding, we've seen companies doing pretty well still in that sector. If you look at the tea sector, the tea subsector, they've done quite well. There was a time that the tea auction was down, but if you look at the month of August and September, it has picked up quite well.
Prices and volume, or just prices?
Correct, the price and volume.
Okay.
Yes. The same to coffee, though coffee is still lagging behind.
Yes,
but look at it vis-a-vis what we posted in the month of April and May, then you could see a slight spike in the volumes traded for that sector. If you look at the cereals, you remember the other day the government went out there and said they're going to purchase maize from the farmers. Remember, this is the harvest season. They're going to purchase maize from the farmers around 2,400 shillings, which is a good thing for them, because now as they harvest, they're able to offload the harvest to the government or to NCPB. It's a good thing for them. So largely the agricultural sector, we expected a very slow or a negative growth for the agricultural sector, but we have seen quite some resilience in that sector, and they have posted some albeit small growth for the quarter ending, for the third quarter, now for the fourth quarter, that the harvest season. If you go to energy, there's been a challenge, because we have quite some heavy supply. If you look at hydropower and even the wind power, we've had quite some heavy supply of power in our economy. But the supply is I would want to call it overpriced, or not matching the demand. So I think that's the challenge. That's the challenge that.
Sorry to interject. Why do you think we have a situation where the demand doesn't meet supply? Because if you actually go 5 or a decade earlier, it was more of a national strategic action to actually enhance the output of electricity, with the opportunity or the imagination that there could be sufficient uptake of this. What was happening? What was the point of disconnection, and where are we at today?
I think energy is a very critical factor of production in our economy. Almost all the industries in manufacturing would need energy to run their production lines. But that energy, the most critical factor is the cost of that energy. One is availability, which the government has addressed, but again the cost. If the cost is not managed properly, then you'll find these companies producing goods that they cannot sell. Remember, we live in a global village. So if I'm a manufacturer in Kenya, then I'm competing with another manufacturer manufactured in China.
Yes.
Therefore, if the cost of energy in China is lower or substantially lower than the cost of energy here, then I cannot compete with this other company in China. That is why you find sometimes that imports of the same product are priced at a lower price than what we produce locally. Look at the example of the sugar subsector. If you import sugar from Brazil, then it lands here after all the tax is still cheaper than what we produce locally. So energy is one of the factors that build into the eventual cost of our products that we manufacture locally. So my take is that the energy sector still needs a lot of work to be done. We've addressed the supply, but now we need to address the pricing of the cost of energy, as it were, especially for the manufacturing concerns. Remember, they are the heaviest users of energy. Another aspect in energy is petroleum. Remember, petroleum, there's a time we were here with you, I think that was in the month of April, where petroleum was trading as negative
now
figures.
It's back up. It went up slightly over $40.
It's back up. Correct.
It's not about
40. So I think that's also another means something to really watch out for. How are the prices going to pan out in this quarter and the next in the next quarter? I think for petroleum, our biggest challenge are the taxes that the government levies, because if you look at the landing costs of crude oil in Mombasa vis-a-vis the pump prices at the retail stations, then you see that there's a very huge variance. So that is something that again the government must address. Why can't we enjoy the low cost of petroleum across the globe? So that's something that the government must address. So for energy, my only challenge is there is supply, yes, but what is the cost of that supply? That is the area that I think government should really come in to address. Something else is there was muted consumption, especially for hydropower, between the month of April, May, June. Why? Because most companies went into either they downscaled their operations or they closed shops altogether. So the demand for energy within that period was quite muted, and that is why that can reflect in what KPLC posted, decreased profitability, and I believe that should happen to the likes of KenGen if you look at their financial figures at the end of the year. So I believe that's a sector that is not going to do well this year, but I presume as the economy picks up, it will start posting good figures in 2021. If you look at manufacturing, the biggest players there are the likes of EABL, and EABL has done quite well. Let me put it that way. In the circumstances, let me put it that way. Let me put a disclaimer.
In the circumstances, would you be biased if you're saying in the circumstances? Would it be better?
Correct. It would be better if things were normal.
Okay.
If things are normal, it should have been better. But in the circumstances, EABL has done pretty well. Their figures have gone down, but not with those huge margins that we expect. I think they leveraged on the market that are outside Kenya to push up their sales.
So Tanzania and largely Tanzania.
Uganda, yes, and even Rwanda. If you look at the other players in that sector, they've not done quite well if you look at the vis-a-vis what they did last year. But in the circumstances, I think it's also a sector that has shown resilience in this space. Building and construction, mixed reaction. Let me put it that way. It is a sector that experienced quite some oversupply again in beginning last year. In fact, we're talking about commercial office space being oversupplied in the market, and again with little credit creation, you expect demand for units to be lower. So I expect that sector to not to grow very much between this quarter and maybe the third quarter of next year. So it is going to have a flat growth in the next 2 or 3 quarters, until we start seeing credit going into that sector. Banking sector, I think, has done well, if you were to ask me. If you look at their figures, the figures that they posted, I think Equity posted a slight reduction in the profitability, Cooperative Bank the same, KCB posted a 14% drop in their profitability, but in the circumstance that is expected. If they were to post something more than 50% drop in their profitability, then I would be worried.
Okay.
But anything less than 15%, that is explainable,
Okay.
and that is good performance. So to speak. And again, if you look at them vis-a-vis their peers in the region,
yes,
then you can see that the banking sector in Kenya has really tried to maintain the basis quite well. And then finally, if you look at
no, I mean on the banking
telcos,
sector, just if I may, I think there was also just the point of differentiating between the profit after tax and the profits from operations, because what we did see was huge loan loss provisions passed through, which were adverse for the bottom line for this month. I think like KCB was down 39%, equity down 24%. So I think the key thing we're trying to see there is on a day-to-day basis, their numbers are good, but on a prudential basis, they're not as good because they have to cover for the eventuality of non-performing loans. But based on where you sit and the interactions that you have, do you get the sense that the banks were either too cautious or either the banks are too cautious or the businesses are just not going to do well in the next 12 months? What's your take on that?
I think it is a mix of both. If you look at the operating profits, the reductions are not quite huge, but if you look at now the PAT, then the reductions are quite heavy, and then that comes in with the requirements of IFRS 9,
yes, IFRS 9.
which central bank is trying to push in that industry, so that you provide 100% for any doubtful debts. Of course, this year you'd expect banks to provide more for bad debts, given the business environment, and that is why you will see a reduction in the profit from operations is minimal, but the reduction in profit after tax are quite huge.
Okay.
But the rider is that some of these provisions, sometimes if the bank is able to recover those monies, then they write them back into the profit and losses. So you might find that at the end of this year they'll post quite some substantial reductions in their PAT, but come next year the same is reversed into their
what's
profit,
the probability
profit and loss. I think the probability is, I would give it 60%.
Okay.
Because some of these companies were not able to pay simply because they were not in operations. I'll give you examples of private schools that are banked in some of our banks. Most of them are not able to finance their loans 100%, meaning they could not finance either interest or principal, simply because they're out of operations. But when they come back into operations, then they'll pick up from where they left, and some of those suspended interest will be written back into the profit and loss accounts for these banks. So I think for banks, it's about being prudent as required by central bank, but I think it is going to hit them hard this year.
Okay.
But come next year, we'll see quite some good recoveries.
Okay.
in that sector.
Okay.
I wanted to talk to you about the telcos, the telecom.
Oh, the ICT and technology sector.
Exactly.
What are your views on that?
That's the sector that I think they're smiling all the way to the bank.
Oh yes, Safaricom. We were discussing that earlier with you.
If you look at Safaricom figures, they've done quite well, and that was expected because most companies moved their transactions online, meaning the beneficiaries of that shift was the telecommunication industry. I've not seen the figures for the likes of Airtel and Telcom. Yes, okay. yes. I would want to see their figure, how they have performed within the season. But you look at the Safaricom figures, then you can see that definitely the pandemic has have a positive impact in their bottom line, their profitability.
Okay, all right. So it seems like there are pockets of opportunity, but it's very selective. Correct. In terms of what next. So I'll come back again to the kind of business that you do, because yours is business consulting as well as provision of accounting services. If you're speaking to your clients today, what are you telling them to do? Are there opportunities from this report and from your experience that are emerging as new business opportunities, where, for example, I say, I didn't make money in this sector, I haven't been making money, but since I have some capital, should I move it from one sector to another? Or are there asset classes that jump out to you that say, you will make money here passively vis-a-vis making money actively?
I think my advice, what I've been advising my clients is, this is a time to be strategic. You might not make money in this quarter, but if you're strategic enough, then you'll make a lot of money in the quarter 1 or quarter 2 of next year. Okay. Remember, this is the time that most companies are coming back to life, and when they come back to life, they want to get the services back. They want to get the operations back to business. So they'll require service providers to come in and support their business visions. And this is the time now to be strategic and to be innovative. Okay. There are things after this pandemic that will not be done the same. Be there. So any business person or any player in some of these sectors just need to be innovative, one, and to be strategic, so that you get hold of these opportunities as they come. Okay. There's going to be a lot of business process outsourcing going into 2021, because most companies would not want to do either physical meetings or physical business. So that's an opportunity that is already foreseeing. So I think any person looking at the future just needs to be strategic, one, and then to be innovative, to get hold of some of these opportunities that are coming into play.
Into this.
Correct.
And then, George, then finally, if you have to be innovative and strategic, what key lines are you looking at in the income statement or balance sheet or cash flow statement that you can say a good business will pay attention to, which would also be a read-through for somebody who wants to make investments, whether in listed or in private opportunities?
I think currently. There are sectors that have done well, that most investors would want to be looking at. And as I just said, manufacturing is one of them, and we've talked about the telecommunication industry and even the banking industry. So these are sectors that are likely to experience quite heavy growths in 2021 and 2022 as they come out of the recession, so to speak. So I think this is a time to look at, if you're looking at a company's balance sheet, then you'd want to look at their net worth. How is the net worth looking like vis-a-vis? You'd not want to look at their profitability this year. You'd want to look at their net worth and then their business model. Does their business models support the new business environment? Okay. Can it survive the new business environment? Those are the things that you'd want to look at. So a company that has good net worth, even if it has not made money this year, definitely will make money next year. If it has a good business, it has a good business model.
All right, thank you so much. That's all the time that we had, George. Maybe you can leave us with a parting shot, looking at the leading indicators report and also looking at the business as it is today.
I think my parting shot to our viewers is we've started seeing a growth, I think, for the month of October, and I expect this to pick up as we go into November, December, and even January. So this is the time now to start dusting. In employment, called dusting your CVs. This is the time to start dusting your profiles and going out there to look for opportunities. Yes. There are going to be numerous opportunities in the new year, and it will be for those who are strategic and those who are innovative enough to pick those opportunities.
Oh, fantastic. Thank you so much, George. I was George Munga. He is the managing partner for AMG Kenya. He's left us with two key things to look out for. Whether you are an investor or if you have a business that you're currently running, the key thing is to be strategic and innovative. And George has also told us that you need to be dusting off your CV. In other words, the time between now and the end of the year, which is less than 3 months to go, we are in the final stretch, spend a little bit more time doing your research, doing your analysis to identify business opportunities that you can get into as an active investor, or conversely, on the converse side, looking at investment opportunities in the public realm that you can also get into as a passive investor. We look forward to seeing you again, same time tomorrow. That's all from us at Markets Today. Thank you and good afternoon.